All right, so thanks everyone for joining us again for our monthly market update with Adam Bruner from Flagship and Jake Brendel from Goosehead Insurance, and yours truly, me, your trainer. We've got lots of great information today, but before we get into that, I just want to do a couple updates on upcoming trainings and awesomeness. Tomorrow at 11 o'clock is our company webinar all on FHA, VA, and therefore USDA, because USDA follows FHA appraisals. Even Adam, if you're not super familiar, like in the weeds familiar with the handbook, you're welcome to join us for a refresher, but I'm sure you're very familiar with those. So we're going to go all through the FHA handbook and the VA guidelines on appraisals. May 28th is a little pop-up training on AI and getting the most out of ChatGPT in your business, which I'm super excited to bring to you. Also a reminder for anyone from Pennsylvania on here, and I'm sure anyone can join if you're close enough, but our Family Fun Day at Hershey Park is June 22nd, so get your tickets now. If you get them in the next 10 or 11 days, you also get a free t-shirt. So go ahead and get those purchased. And before I forget also, give me one second to add the link in here. Our Central PA branch has been nominated by Harrisburg Magazine's Simply the Best contest as the best real estate agency. So even if you're not at the Central PA branch, every single unique vote counts and goes towards us winning that, which would be super cool for marketing for everybody, really. I'm going to put the link in the chat box. If you wouldn't mind voting, share with everybody. Adam, share with all of Flagship. Tell every processor, every under, tell everybody to vote. And if anyone wants to share with your offices and just ask everybody to vote, I would super appreciate it. So the link, it's a very short link. It's a custom link. It's a great thing to brag about that our company's been nominated. So please share and vote for me. It takes 2 seconds. That takes you right to the vote button. You just go push vote. I would super appreciate that. It's a very near and dear contest to my heart, for a longer story than we have time for. So I'm thinking that is all of my announcements. So Adam, if you want to take it away, I can share my screen if it's time to do that.
Absolutely. Let's just hold off for 1 second before we pull up that job aid. Um, uh, what I'm talking about today is Fannie Mae's update of appraisal waivers. Formerly, appraisal waivers required 20% down. Now, Fannie Mae has changed that requirement to 10% down. But I will take a step back for just a second. For those of you that are not familiar with the appraisal waiver and the appraisal waiver process. Long story short, on a conventional loan and a conventional loan only, so we're talking Fannie Mae and Freddie Mac, if a borrower, and formerly, if a borrower was putting 20% down, you had about a 30% chance that you would receive an appraisal waiver. Now, most agents are only familiar with this after a loan's already in underwriting. Okay, you might be familiar, maybe you've never even had an appraisal waiver on one of your sales or on one of your purchases. And chances are it's because your loan person was not looking for those appraisal waivers. Most lenders are not plugging in the property address when they're updating your pre-approvals and when they're updating the fee worksheets. Therefore, they're never running the automated underwriter system to find out whether or not you can offer an appraisal waiver. And the beauty of the appraisal waiver is, and what I do is I look for these up front so that when we're going to make an offer on a house, we can write it in our offer that we do not require an appraisal and we can guarantee the price. So what we're doing there is we're saving the buyers $600 at closing. Now there is still a small fee for the appraisal waiver. It's like $200, I think, but we're still saving $400 if we don't have to pay for the full appraisal. We're also reducing the travel time of the loan. If we can cut out the appraisal process altogether, we can close that loan in 3 weeks. It happens all the time. The other thing is we are strengthening that offer because we're guaranteeing the sellers that they're not going to have an appraiser come in there and find any issues with the house or have any issues with the value. So again, before we had to have 20% down for the system to even look for that. Now it only requires 10% down to look for it with Fannie Mae. Freddie Mac is still at 20%, but I'm sure they're going to jump in and update that soon. And again, what that means to you is good communication with your loan professionals. If you're looking at a house, if you have buyers that are putting more than 10% down, we want to start looking for that before you make your offer. Danielle, if you did want to bring up that job aid real quick, um, and again, this can be parked in the Foundry. This is just regurgitating what's already on the Fannie Mae websites. And what we're seeing here is for primary, if we start on the left-hand side with Fannie Mae. Now, Fannie Mae will allow for these appraisal waivers on purchases of now putting less than or more than 10% down or less than 90% LTV. We can also get them on rate and term refinances with 90% down. And we can also get them on cash out loans or cash out refinances with more than 30% down. Fannie Mae also allows for these on refis with investment properties, but we don't see it too much. We just don't see a lot of that activity, but it is allowed for. Freddie Mac, a little bit different. Freddie Mac is still at 80% down for a purchase. I'm sorry, not 80% down, 20% down for a purchase, 10% down for a rate and term refinance, and 30% down for a cash out refinance on a primary. And then Freddie Mac does not allow for any waivers on investment properties. But again, 80, 90, and 60 LTV for a cash out on a vacation house. Now, also remember, the value here is if you have a home, even for listing agents, agents that work primarily on selling houses, if you have a house that may potentially have an issue, that buyers might be concerned about. We can look to do an appraisal waiver because if one lender has it, all lenders will have it for that buyer. It's not something that is specific to lenders. It's something that is through the Fannie Mae and Freddie Mac underwriter system. So again, if you have a sale and you're concerned about something in the house and something on an appraisal, reach out to me. I'll be more than happy to run an AUS on one of my pre-approvals to see if we can get that appraisal waiver and let you know. And then that way, you know that you could potentially find a buyer that should be offering an appraisal waiver. And if they're not, call me. Let's talk about some of the other things that would make the pre-approval, or excuse me, the appraisal waiver ineligible. Just a few things to point out there if you want to scroll down a little bit, Danielle. Mortgages with existing appraisals. If a lender has an appraisal, we have to use that appraisal. So, for example, if we would have an appraisal waiver at 200, but we wanted to buy it for 220 and we didn't have the appraisal waiver at 220 and we offered the 220 and went and got an appraisal, but then something came up, we can't switch gears with that particular lender and say, oh, just kidding, we want to go back to the appraisal waiver. If we have an appraisal, we have to keep it. But because I'm a broker, we could switch lenders, target another lender that would not see that appraisal and continue to move on with the appraisal waiver. Also, ineligible findings, it's never going to look for the appraisal waiver. So it has to be an eligible borrower. Sounds kind of obvious. Manufactured homes, we won't find it. Leasehold properties, okay? So if you have to lease the land, no appraisal waivers are eligible, no multi-unit properties, no mortgages with resale restrictions. Construction and renovation mortgages, we can't use the appraisal waivers. Non-arm's length transactions. Now that also ties into that last one with the gift of equity. So if you're selling to a family member, and we might say, well, why not? Well, because the reason is that's not a real market value if that's where they're selling the price. Because even though Fannie Mae and Freddie Mac are giving the appraisal waivers, they still want integrity to the prices, and they also want integrity to the condition and the value of the house. So we will occasionally run into situations where we have an appraisal waiver, but they still want to send an appraiser out to the house to take pictures. Again, that is to update the system so that we can get more accurate appraisal waivers in the future. No purchases of REO properties. So, typically that means no purchase of investment properties is what that's saying. And that's in the matrix at the top. The other interesting thing is fair market values or values of the homes of more than $1 million. But there is a simple fix. If the house is selling for like 1.2 million or the appraisal came back at 1.2 million and we're doing a refinance, we can always run it at $999,999 for a refi, because the borrowers don't really care what the house appraises for if they're just taking cash out. So if they have a loan amount right now of 300,000, we can run that value a little bit lower and potentially still get a waiver. Also, no co-ops. And also the other one that it doesn't really come up, but if there would be a mortgage insurance company that does not honor the appraisal waiver, that could throw a wrench in it as well. So that is now going to come into play with folks that are getting appraisal waivers with less than 20% down. So in that 10% to 20% down bucket, that'll be something for me to navigate when we have a target lender. We'll make sure that the mortgage insurance company is also honoring the appraisal waiver before we make our offer. So really exciting news. What I want to make sure everyone is thinking about is if we do get an appraisal waiver at a lower value, and we have a buyer that has potentially a little bit more money in reserves, remember we can still offer that lower value with the appraisal waiver, but then possibly offer to cover the seller's some of the seller's closing costs, like offer to pay the transfer taxes, offer to pay some of the agent fees, so that we can still maintain the net proceeds for the sellers and take advantage of that appraisal waiver. So that's where it's going to come into my creativity and my expertise to kind of combine some of these things to strengthen our offers. And again, name of the game in today's environment is anytime that we can improve our offers to put our offer at the top to get an offer accepted, we've got to take advantage of that. And this is a big one. We are now seeing these appraisal waivers up to 10%. So that's all I had. Let me know if you have any questions.
I think that's awesome.
Anybody?
Yeah, awesome news. I mean, people are really afraid of appraisals. So anytime we can eliminate that, question mark out there, that unknown, that's going to strengthen the offer for sure.
Absolutely.
How quickly do you know? So basically, we give you a property that they're interested in. What's the turn time on knowing?
It's as fast as I can run the AUS system.
Okay.
So if I already have the application and we're just updating a pre-approval for someone, we're talking minutes.
Okay.
Mhm. And it's also something where, it doesn't tell us the range. We kind of have to plug in a number, run the system and see what it tells us. So again, it's something where if we want to make an offer on a house at 300,000, I'm probably also going to run it at 310, 320 and kind of find that range to let you know,
Offer
here's the
more
space we can
safely.
operate in. Yeah, exactly.
Nice. That's always nice because then you can actually offer more than list price and know it's not going to be an appraisal cut.
That's
So,
a home run.
yep, absolutely. Very nice. And a lot of people out there who are not as lucky as you guys to have this monthly update, to have Adam on top of it, don't even know this is a possibility. Even though everyone has, like, obviously all lenders have this who are operating with Fannie Mae have it. They're not updating their agents. Their agents aren't getting updated. So you might have a tool that three other agents competing on these offers don't have. So that's
Absolutely. And Danielle, to even expand on that more, I would say at least once a month I have a listing agent calling me to clarify what the appraisal means on the offer. And these are agents that have been in the industry for 30 years. And they've never come across a lender that's saying, and I kind of explain to them, it's because you don't have lenders that are looking for it. It's available to everyone. It's not anything that's unique to me at all.
Yep, and that's why updates like these are so important. Is it doesn't matter how long you're in the business, things change so often, and just being updated on current events, which is why I know I spend all month keeping a list of things to update you guys on. Adam and I talk throughout the month on, hey, what's the latest, greatest that we can update them on so that you guys don't have to do the homework. We do it for you, and then we kind of condense it into latest and greatest updates. And Jake does, as well. Insurance isn't as exciting as mortgages and real estate, but the tidbits he gives us are also valuable for sure. So, um, Jake, what's new and exciting in insurance other than
Yeah,
overextending
what
your
a
premiums?
segue that was. Yeah. Yeah, yeah, I think I'd echo that. Not as many exciting things going on in the insurance industry. There are some changes that I'll touch base on here that I'm starting to see trends for carriers or whatever. But I want to just touch base. I feel like a broken record every time I come on here every month, but roofs are still a challenge in the insurance market. Pricing is still a challenge. I ran across quite quite a few DTI issues over the last couple of weeks to try to get folks through, the home buying process and have everything work for the loan. And just kind of a friendly reminder that the average cost for insurance, at least in the central Pennsylvania bubble, is still hovering around $1,500 a year, right? So our older homes, 1950s and older, are really on the higher end of that average, right? And really will probably are raising that average, quite frankly, right? And those are a lot of homes that I'm seeing on the market right now. So just something to keep on the back of your head. We have been able to find solutions for some of those DTI issues, which is always exciting, right? You're getting over the hurdle, getting that loan accepted. But sometimes that's at the sacrifice of coverage and some really important coverages, where I've seen some pretty wild deductibles have to go out the door in order to get qualified for the loan. We've have to sacrifice important endorsements, such as coverage for water backup in basements that are completely finished basements, and then also service line coverage, which can cost $10,000, $20,000 to repair water and sewer lines. So, just a friendly reminder of the cost points there as we're trying to get buyers through the process and thinking about, what they'll have to deal with on their worst day after they buy, a home claim. Um, I wanted to spend some time too on some of those trends that I mentioned. So deductibles is a part of that. 1% wind hail deductibles are seeming to become more and more common for carriers. Also, deductibles that are upwards of $2,500, especially for older home claims. I don't think it's taken control of the entire market quite yet. We have some pretty big insurance carriers that tend to move the needle on those types of things that are now requiring higher deductibles for those homes. So, wind and hail deductible, a 1% deductible is 1% of the rebuild value of the home. And as you can imagine, it's 2025. The cost of everything is pretty obnoxious, right? So, your standard home that may be for sale around $400,000 on the market right now is rebuilding, likely, it depends on the age of the home, but let's just say it's $450,000 to rebuild. That 1% means that deductible is $4,500 for wind and hail specifically, right? So think about the impact that has for our home buyers if things happen down the line. Danielle, you're looking at me like you're perplexed, but those are some of the things that are normal on other parts of the country that are filtering in now to Pennsylvania, where we tend to be a little bit more sheltered on those types of things. There are still carriers out there that are offering $1,000 deductibles, which is where I typically land for most clients. But I kept warning us that some things and changes were becoming down the pipeline. I think that will become more and more prevalent over the next couple of years. Um, I also wanted to spend a second on just the value of a local agent, and just an agent in general that can provide advice. I think sometimes the insurance industry can be viewed as a commodity, so to speak. You can easily go online yourself and find yourself your own home and auto policy. But I had two examples this week that kind of open, not, I shouldn't say open my eyes, but it makes you realize, I think, the impact and the value that you can provide on a day-to-day basis. One of them was yesterday, where a prospective client came to me for an auto policy, and I realized we're getting people through the home buying process, but auto is a part of that. With bundle discounts and whatnot. And it's one of those calls where somebody asks you, "Hey, can I ask you for some advice before I give you all of my information?" So you kind of know that you might be in one of those situations where you're just giving out your expertise for free. We've all probably had those calls at one point or the other, and you professionally navigate through them. But turns out her husband had two DUIs recently and a couple at-fault accidents that, as you can imagine, were not super friendly for the monthly premium on the auto side. So we're just trying to think about solutions there to kind of get him out of there. And at one point, she was very frank. Hey, I just might go on and lie and do my online quote to get myself a good price and go. And it's just kind of a friendly reminder that you don't have to do that, right? We can have solutions where we can navigate that situation. You can actually exclude drivers for situations because in this case, husband no longer has license, right? So it doesn't need to be a rated driver on the insurance policy and still get that 400 plus premium down to just over $100 a month for her, doing it the correct way. Right. There are a lot of disclaimers when you fill out things online. If you want to cheat, hey, try to get yourself a good price. That fine print is a big deal, right? If it's found through the claims process, that there's an obvious reason to lie to try to get yourself a premium. So I guess my overall arching theme there is, hey, honesty is the best way to go when you're up against, billion-dollar companies, right, that have all the resources to, come after you come claim time if something goes a different direction. The other one was a home claim where, again, prospective client, where a year ago there was some storm damage that resulted in damage in the lower level of the home. There's no basement here, but it was an online situation where the client calls the insurance carrier directly, inquiring about coverage on said claim, which automatically indicates a claim scenario with that carrier, right? And on that insurance history, right? Regardless of whether there is a payout for claim or not. In this situation, there was a $791 payout on this claim, which took his home premium from $1,235 to 2,908 year over year renewal. So the numbers on that, 791 payout for the insurance company raised his premium just over $1,600 year over year. And that will stay with him for the next 5 years. That claim will be on his home insurance history. So that one was a big one for me is just, hey, if you have an agent, somebody that you can run something off, give them a call, get connected with somebody that can give you some advice before the insurance company becomes involved. Because that's really just as simple as some education there. Hey, here's your deductible amount. Here's what you should do in that situation. Let's get ourselves an estimate. Let's find out the cost, factor in the deductible, and then decide, hey, does it actually make sense for us to go forward with this claim? Or is this something that we should just stick out of pocket, right? Knowing all the factors involved in the claim and kind of work through it. But once that is done, and into the system, there's no coming back. There are home insurance companies that will not offer new policies to clients if there is one claim in a 3-year period. So it's still pretty stringent on that. So just some overall, I guess, arching advice and value of having a local partner in the insurance market. So. All right, I think I rattled on enough about home insurance today, but there's some important things that I thought were valuable, so I want to pass on. You usually have something weird for me, so what do you got?
Like, here's insurance, but don't ever use it. Um, uh,
Yeah, yeah.
um,
I understand that.
I mean, I'm a broken record, but just, of course, what Jake is always saying with those average premiums on your cost sheets, they've got to be high premiums. We've got to estimate high. And if you are getting lender's cost sheets, whether from Adam or anybody else, the day of the $1,200 estimated premium is gone. If I see one more $1,200 premium on a lender's cost sheet, I will scream. Okay. It has got to be higher than that. The last several buyers I've had, they've been like in the 2000s. So I estimate 1,800. And then I go, great news. It's only a few $100s more than I estimated. And they go, that's great. And I'm like dying inside, but it's setting expectations so that when it's only $200 higher, they're like, yay. And I'm like, but they're happy and that's all that matters because I didn't estimate 12 and it came out at 2,200. Okay. So when the lender sends you a cost sheet and they're approving them for $100 a month in homeowners insurance, you send it back and you say, I need you to pre-approve them at least 15 or 1,600 a month because we can't get these people into contracts they can't close. Okay. We don't sell houses. we can't sell. We don't show houses we can't sell. We don't sell houses we can't close. All right. We have got to be working with real numbers here, people. And so you heard it right from Jake. Okay. These premiums are crazy, but that is reality. Also, just for Jake and for anybody else, this is for Pennsylvania only, but I wanted to throw it out since Jake works mostly in Pennsylvania. If people are sacrificing that sewer line coverage, if someone does end up, and this is also for anybody again who's in Pennsylvania and anyone who's not in Pennsylvania, they may have a similar product where you're at, but we have PHFA, which is the Pennsylvania Housing Finance Agency. They have a lot of niche products that people don't realize. One of them is called PenVest, and it is a very low interest rate loan program for either a septic system, if your septic system fails, or your sewer line goes out or breaks. The interest rate's like 1.75%. And they will loan you up to a certain value depending on all kinds of variables. And so just if someone does not have the insurance protection, and we get a lot of these claims and post-closing issues between buyers and sellers on this. So number one is check insurance. But if they don't have the insurance coverage and they need to get that replaced, rather than getting a personal loan from a bank or a credit card right now, or even a home equity line of credit with a variable interest rate, those interest rates are all going to be higher than 1.75%. So look at PHFA as a really great alternative option. I mean, they still have to pay it back, but 1.75% is a really great deal. And it's there to help Pennsylvanians with, just our aging infrastructure. So for those of you who are not in Pennsylvania, again, if you have a state financing agency like PHFA, just look them up and see if they have a similar type program. But that is an alternative to the sewer line protection. So Jake, since you run into people with that issue, it's a backup option. So
That's a good tidbit because insurance doesn't really play with septic systems and those things. So that could be super helpful for a bunch of folks. So
when they call you,
had those phone calls.
I'm in this pickle, like it's something else to say,
Yeah.
hey, check this out and see if you qualify.
Yeah. I appreciate that.
Yeah, we're at least going to save them on
I will.
Nothing else.
Yeah, I will tell you too. So I'm licensed in Pennsylvania and Maryland, but if there's anybody that is on these calls that are listening that is curious about an average cost of premium in a different part of the country, I have access to those numbers, so I can easily look that up and provide that privately if you need.
Excellent. So my updates. Sorry, my nose is just itchy for allergies. So I apologize. It's just tickly. All right. So also going to apologize because I just finished a 45-hour broker finance course teaching it. So a lot of my stuff is finance related. But I could not be more in the weeds in finance if I tried. But I do have an update on the Florida. Florida has been talking about the legislator has been trying to pass legislation to get rid of their real estate commission, which is tragic. It did pass the House, but it has stalled in the Senate. Obviously, the Realtors Association is highly against this because it's crazy. But it does look like it's not going to go anywhere in the Senate. So for now, that has pretty much stalled out. So it looks like that hopefully won't go anywhere past where it has. So that's the latest update on that. The student loans, we've heard about that coming due. Statistics show that there were about 20% of student loans were 90 days delinquent in February when they've now decided to reinitiate collections and have them hit credit reports as delinquent accounts. So I'm not sure if Adam has seen a lot of activity in that regard. But stats do show that credit scores did drop pretty significantly for those folks affected. People with high credit scores saw drops of over like 170 points. Low credit score people saw them drop about 80 to some points. So a lot of buyers could be affected by that drop in the credit scores. So having people definitely reach out. Once they get several payments under control, they can reach out to the servicers to see if they can start to remove some of those derogatory marks. They can consolidate those bills into one. That's going to affect their average age of accounts, but it could help them get them consolidated into one manageable payment. And then there's also income-based repayment plans. So it's something that you could definitely at least get your folks to not just sit and do nothing, try to be proactive in getting on top of those. Adam, do you have anything to contribute on the student loan?
Yeah, I think the wave is coming. There's going to be some lag time between that change and when we actually start seeing it hit the credit reports. I have had one or two come up, but as a practice, what I've been doing now is normally on deferred payments, there's a little code that just looks like it's eight numbers, but really it's a date and it's deferred until that date. So what I've been doing is cutting and pasting all of the line items on the credit report, sending it an email to the borrowers and saying, hey, your deferred payments are up in 3 months, 6 months, whatever it is. 99% of them write back and go, I didn't know that. Okay. Now, I'm sure a lot of them are getting calls, things in the mail, but so many people have student loans tied to old addresses that I know there is going to be an issue within the next 6 months. I just have a sense that it's coming. So, other than that, I don't know what else I can do other than give people a heads up. But yeah, I think it's
Yeah. Um, Also for fun, now I know everyone's on mute, so either unmute or put it in the chat. This is just a fun, and you guys play along too. Jake and Adam play too, unless you saw it on my Facebook and then don't ruin it. Um, so same with Layla because we're friends on Facebook, so don't ruin it if you know the answer. But going in line with the student loans, because when they came out, the average national credit score dropped by only 1 point. It only made the average credit score go down 1 point. What do you think the average national credit score is?
I didn't see this post.
Well, you don't like follow me every day? What?
I didn't see your post, but I heard someone reference it, and there's a number in my head, but I'm not going to say it until somebody else. I'll let somebody else answer first.
Darren voted 690. Okay. What else?
I would say 650.
50. Okay. Like the price is right. Who can get close without going over? You know what I mean? I voted dollar. Who else has a guess? Someone was talking to you about my post. I'm popular.
Yeah. All right. If no one else, I'll throw in my last guess here. It was higher than what I thought it was going to be.
Yes.
It was like 730 or something crazy, or like 710.
It was 717.
Oh,
That's awesome.
That's crazy.
yeah, it is awesome.
Yes. Yes. Wow, says Darren. Yes, it was crazy. I did that in my class of broker candidates, and they were all like, we think it's like 570 and 620 and really low. And I'm like,
Yeah.
yeah, because realtors
Yeah.
have no faith in humanity.
Was that their average credit karma score?
Average FICO.
All right.
Average FICO.
Good,
Yes.
good, good.
So yes, it was yeah, pretty crazy. I can't believe that's the average. I was floored. So, but it went down 1 point after the student loan collections were allowed to start posting. So I thought that was just fun knowledge. And you can use that in your social media, right? That got a ton of engagement. I put that on Facebook and I got a ton of engagement. Some of the stuff that we talk about on these monthly market updates, go back and use this on your social media, right? Make graphics, make news, make, hey, did you knows? This is all information for you guys to recycle and repurpose. Also, one thing that I found out, so RESPA, Real Estate Settlement Procedures Act, that does govern all of us on here on the call, actually. One thing that I've seen become a severe problem in my market area, and I'm sure it's everywhere, is the strong arming of buyers to use the seller's title companies. I'm seeing that manifest in many different ways. Builders charging buyers fees for not using it as opposed to the incentive format. Recently, one of our agents had a phone call where she had called and inquired about the cooperating compensation, if any. And the listing agent said, we offer 2.5% if your buyer uses our title company and 2% if they don't. And I thought that was hilarious. And I said, my advice to our agent was to write back and go, well, that obviously violates the federal law of RESPA. And so it's actually kind of funny because I charge 2.5% to keep my mouth shut and 2% to tell on you. So, but that's just because I'm a terrible human being, but whatever. With that, I wanted to also share, there was actually a case recently where a title company or a real estate agency, I apologize, a real estate agency was actually fined $500,000 for strongly encouraging using the seller's title company in like listings. So it doesn't have to just be forcing, it can be strongly encouraging. And I do see this in listings sometimes, like seller's preferred title company and things like that. So just be really careful. It's become tradition, buyer chooses, but it's actually law that buyer chooses. So we have to be really careful with that. Me personally, the only time where I would suggest on the seller side to use my attorney is when my attorney's done significant legal work, whether it's a bankruptcy or an estate, something really complicated. And even then, I'll just say to the buyer's agent, hey, like it's really complicated on the seller side to get this thing cleared for closing. Do you mind if, just to make it all seamless, how do you feel about? Like I'll have just a conversation. And if they don't want to use it, that's fine. And most of the time they're like, yeah, we just want a smooth closing. That's no problem. But other than that, on like a really, again, extreme situation, no matter how tempting it can be, even when it was the height of the seller's market and you could get them to use your title company because they want the house, you just can't. It is serious law and they do catch people doing that. So putting that in like a listing, I mean, that's just asking for trouble because it is in writing, it is out there, it is publicized, and so the fine's $500,000 is no joke. So just be really careful with that going forward. So I wanted to point that out. Otherwise, what other fun news did I have? I had two little pieces of fun facts and then two marketing tips. So one is just a fun fact. It's not political because I don't talk about politics. I talk about trading and fun facts. The US credit rating has been dropped for the first time since 1917. I didn't even really know we had one. I knew that municipalities, because LA, Los Angeles just got downgraded as well. And so I knew municipalities were rated just like businesses are. It's the same Moody's and S&P and things like that. So that's kind of cool. I mean, not good, but cool, interesting, interesting. Since it hasn't happened since 1917 and I like history. So that's a fun fact. And people might mention it. So that's interesting. And gold prices are surging. So if you want to invest in gold or have gold to sell, now is the time to sell gold. Again, I had way too much time in finance class. So, but it's up around $3,300 to $3,500 per ounce. I think Goldman Sachs predicts that it might go up to about 4,800 per ounce by the end of this year or next year. So gold is where it's at, people. That's my fun facts. And right now for marketing, just remember, like right now, and any time for marketing, it's finding people's pain points. It's not just I'm a great realtor, buy a house, like finding people's pain points and providing solutions. And right now there's a lot of pain points. There's a lot of uncertainty. There's a lot of economic stress right now for people. So anything we can do to help. One thing that I always talk about is mortgage insurance. Values have gone up over the last several years. So if anyone has bought their home conventionally with less than 20% down, they're current on their payments, values have gone up so much that any kind of reach out to anybody in your sphere, past clients, but just anybody you can look at their home and give them an estimated value for like a market value for what they could sell their house for. They might be able to call their mortgage company and get the mortgage insurance dropped. That could save them maybe $100, $6,500 a month. That's groceries, right? That helps. That's a bill. And that is a warm reach out. It's a service you're providing. You're hitting a pain point, and they may not know how much equity they have. Maybe they've been looking to downsize or upsize. They don't know how much equity they have in their house. You might get a sale out of it when they're like, oh crap, I actually have 50,000 in equity. I had no idea. Like they might not realize how much their value has gone up. So what a great opportunity to hone your skills, talk to people, practice valuation. Like there's so much positive that can come out of that and just touching your sphere. So reach out, do the mortgage insurance. If you have questions on how to do that in more detail, reach out to me or Adam. We can both talk you through what that looks like. And that's just a great warm touch to be doing right now. And then also just like reverse mortgages for older people. Again, it is a painful time right now. Like the economy is hard, costs are going up. older people who are trying to stay in their homes, talking to them about a really good reverse mortgage product. There's the FHA product. It's a no recourse loan. It's very, safe for them. And they can access some of their equity to help with prescription costs and grocery costs, and all the cost of living is going up for older people. It's a pain point. And if you take the time to get educated in it, I know a lot about it. I'm sure Adam knows a lot about it. We can talk to you about it, get you educated on it if you have an interest in it, or you have a lot of older people in your sphere of influence. It's providing a solution to a current pain point. So those are two things right now that you should really be like working on in your sphere of influence, because again, it solves pain points. So think about that in your marketing: is what problems are people facing right now? Be relevant to what people are going through and provide solutions. So that's my advice.
Yeah, Danielle, the big thing I'm seeing with those reverse mortgages is folks that are looking to downsize. They're going from a larger house at a higher mortgage, but because interest rates are higher, they downsize and they wind up with the same payment. This is where I'm finding the benefit of the reverse mortgage is still allowing people to downsize and manage their budgets.
The reverse mortgage purchase is the best product in the world. It is my favorite product, and I will do one before I retire. It is my life goal. Maybe next month we'll talk a little more about the reverse mortgage purchase dynamic and how it works. But if you're interested before next month, hit Adam up, hit me up. We'll explain how it works. But I mean, it is the best service you can give to someone looking to downsize and not have a mortgage payment. It is genius. So find pain points, be a service to them, and you'll get repeat business and referrals. And yeah, so that's my advice today. Any questions on anything we talked about? We really hit you with a lot of information this time.
I actually have a question, and it's actually been asked throughout this meeting, and I don't have an answer for it. It's actually the buyer that I'm dealing with in regards to insurance. So they've gone with two other companies, Progressive and Erie, and they didn't really disclose like the inspection or the seller's disclosure. Pretty much just told them the year of the roof, and then they filled out all the other stuff and gave them a quote. They're going now with like a third company just to like shop around, and this third company is like asking them all these questions and all this stuff. And I guess my question is are we able to like refer them somewhere, or just tell them we don't know? Is that an acceptable answer? Whereas like these other companies were able to kind of, I guess, plug whatever in and push this through, where this third company is giving them like a hard time with all these complicated questions. I don't know if that makes sense.
You're on mute.
That's a good question. That is a real world that happens a lot on a day-to-day basis. We don't know the roof age for various different reasons, or you guys could probably think more than even I know of. The short answer, I think, for the third party company is they've probably been through some situations where they've had post inspection issues with maybe various different insurance companies, where the insurance company goes and does their own individual inspection, which will happen on every single home policy, especially right now, right? And as you can imagine, they're looking through a particular lens, right? They want to make sure that the roof is in good quality condition. So my guess is that they're asking more questions to try to avoid that, right? Post buy, and then all of a sudden your buyer is in a situation where insurance inspection comes back and it's not good, and they have to replace the roof and replace it quickly, right? Because if that happens and the inspection, quote unquote, fails, the insurance company will send a letter, and that will go right to your buyer. It says, hey, we've determined that the roof is not in good quality condition. You have 30 days to fix it, or we will cancel the policy, is the other end of that. So good luck, right? In that scenario, finding a contractor that will be able to do that. So I guess the way around that is just to have honest conversations, right? And have your buyer be honest with whoever they're providing insurance to. Hey, we don't know the age of the roof. If you have any insight whatsoever, sometimes through an appraisal that will happen. If you have a pre-purchase home inspection, those are super helpful to give us insight on the age of the roof or the guess of the roof. I've given a ton of advice to have a independent roofer come out and take a look look at the roof and give you some ideas of what it might cost or what the age of the roof might be, right? You might have to have some relationships there with a roofer, but anything that could avoid basically a throw of a coin on the insurance inspection. That's what we really want to avoid in those situations is the post-bind insurance negative news, right? There are some solutions there where I've still written a ton of policies with an unknown roof, and have had a lot of success with it, right? Just based on experience and how we kind of roll through those situations. And I will tell you that I've had some post-bind inspections that haven't gone some favorable either, right? But at least in those situations, those people know and they are prepared, and prepared financially, I think is the most important part to tackle those things and tackle them quickly. Because we'll give some advice. Hey, this might happen. I think you're on the edge where it might go a little bit negatively. Here's how the process works. Here's what you can expect. You have a litany of things to buy when you first buy a house. Please don't, and just be prepared for this when it comes out, so that way you can navigate it effectively. Some people will have different opinions on that than others. So I was long-winded, but I hope that gives you some insight.
It does give me some insight. My follow-up question is with this particular case, the roof is great. It's 2019. However, the questions that are asked is if the furnace is updated and if they have knob and tube wiring. So like stuff like that is being asked, like the little stuff, the little details. And we're kind of sitting like, thinking, do we respond to that or do we, how do we handle that? Where like other companies
Answer
were
what you
totally.
yeah. So like the key is like anytime I have a buyer, I always tell them whatever the insurance company asks you, you make a list and then I will find the information and give it to you to give to them because I don't want them sending a whole disclosure or a whole inspection report. So
Right.
we will find the answer and we will give them the answer. It's the honest answer, but I don't want them having a whole document of extra information they don't need.
Got it. Like, so don't give them information that they're not asking for.
Correct. It's
Yeah.
they've asked for, we will get it and we will give it to them. I know every time I get a policy, like my insurance agent, he wants to know how many doors, how many ceiling fans, like how many windows, like it's very thorough. And because I'm an agent, obviously I just like I go through the multi-list, I count the doors and I count the ceiling fans and I give them all the information.
Yeah.
Some of them are very thorough and some are not very thorough. So we're always going to give honest, accurate information. And sometimes we can go back through prior multi-lists, listings to find old disclosures, old photos, anything we can find to get the right information to them. But we just we want to make sure the client's coming to us first, because also I want to know what they're asking, because there's things that's like, no, that's not a right question. You know what I mean? Because people will overstep. And I've had insurance agents say, oh, just send me the inspection report. No. You don't get that.
That's exactly what they asked for too. So
Yeah.
we have to have a conversation about this afterwards as well.
So I just train my
I will
buyers.
tell you that
Always ask me for everything and I will tell you what to say. You know what I mean? Because I just want to make sure the buyers are always checking with me before they do anything they can't undo.
Yeah.
I will tell you that Progressive is one of the insurance companies that will ask for a pre-purchase home inspection in order to qualify for a policy. So there are some companies that are starting to ask for that stuff, or you won't get the policy, right? Now, not every company, right, in that situation. And some of those questions you're asking, knob and tube, update of the furnace, those are pretty much questions that every insurance company will ask as part of the application, right? So we have to fill in an answer there. Now, whether you know or you don't know, right, is a different thing. But I think those are normal questions to ask. Some of those things I think can be assumed, right? Like I'm not asking a knob and tube on a 1960 built house, right? I'm just, I'm going to ask on your houses that are 1930s and older, right? That was the time knob and tube was installed. So yeah, I think it just kind of depends on the agent and how many questions they're asking or how much of that stuff you can find on your own via listing photo or just knowledge of the house being built.
Okay, got it. Thank you.
Of course.
All right. Well, lots of good information. We'll do it again
Not
next.
every day I get an insurance question. I was fired up.
I just started getting text messages and I thought this was a great opportunity to bring them. Start a
Yeah, I
conversation.
love it.
Well, maybe I learned something I didn't know.
My questions are just chopped liver, it don't matter. I don't count.
That's true.
All right. Well, if there's no other questions, then we can all go out and enjoy the rest of the day.
Hey, have a good week, y'all.
All right. Have a good week.
Enjoy it, everybody. Have a great week.
Thanks. Bye.
See ya.